everybody. It's Jessica Stone at Stansberry Research, and I've got Brian Tycangco on the line from the Philippines. He, of course, is our senior analyst with True Wealth Opportunities China. And Brian, a big week for China this week as they have now decided to hold their delayed legislative congress. 5,000 people descending on Beijing for this. It's a big crowd in light of the coronavirus. Are investors more understanding of China's inability to give it the kind of growth that it traditionally has said that it could provide?
I think that investors are very forgiving about growth targets all around the world. I think most of the world is admittedly already in recession. The US is in deep recession. China probably going to be in recession second quarter after posting a big decline in the first quarter. But investors are going to be looking for pockets of growth. They're going to be looking for those signs of return to normalcy or pockets of growth. And how does China stimulate these corners of the economy that can generate those pockets of growth that can result in meaningful growth towards the end of the year and the following year? Before that, the meeting actually took place, I was reading up on the state media, because they usually provide hints as to what might happen, what might transpire. And interestingly enough, they've been sending out messages of huge investments in terms of technology. And that's not surprising given that China's sort of being isolated in the technology front in the world in terms of, because of the trade war. They're actually thinking of spending $1.4 trillion over the next 5-6 years to advance their technology industry, basically becoming self-reliant in the face of this brewing trade war that's isolated companies like Huawei from the global supply chain. One more important thing about the meeting is that they've emphasized as well on two key things that we need to keep an eye on. One is the emphasis on broader personal rights and rights to privacy, because China, as we know, is really forging ahead in terms of the use of data, big data collection, basically how they're going to turn the economy into this digital economy that utilizes all of that. And now you have finally some sort of way to address the growing concerns about digital privacy. So that's good to hear, but how they enforce this, how they go about this remains to be seen. Another aspect that we see is that they might now do something about Hong Kong in terms of enacting a national security law. The national security law basically is going to lay down certain rules as to what constitutes something illegal, like what's seditious, something that goes against the government, something that goes against love for country. Yeah, it's kind of scary when you think about it, because that's what a lot of Hong Kongers have actually been afraid of. But I think reality is starting to set in that, hey, this is something that's going to happen, that China wants to happen. I think China is finally putting its foot down because they see the instability in Hong Kong is really starting to impact the future of that city and its role in the Greater Bay Area, which is one of China's grand schemes for its, for the next 10 years.
You mentioned Hong Kong. We know that the Hang Seng has just actually opened up to mainland Chinese listings. What are the implications of that for investors?
Oh, that's actually very good implications for investors who have been investing in a lot of these Chinese tech names, especially the ones listed in the US. Why? Because Alibaba started it all. They started when they listed in Hong Kong in November of last year. It was a roaring success. That was so important because it finally sent a message to the world that Wall Street isn't the only game in town, that you can actually have a $500 billion company successfully list in Hong Kong, and the demand would be so huge that it actually pushed up the share price of this $500 billion company by 20% over the next month and a half. Now, with regards to being included in the Hang Seng, that's the second step. I mean, being included in the Hang Seng index will allow Alibaba and other companies to follow in its wake to sort of gain more reputation in terms of where they stand in the global marketplace.
A lot of moving parts. there in Asia. Thanks so much for joining us, Brian Tycangco there. And if you would like
You're
to see
welcome.
much more content just like this, please do subscribe to our YouTube channel. You can also find us on Facebook, Twitter, and Instagram. Thanks for joining us. That's all for now.